Good morning, and welcome to Storm Stock Solutions. I'm Grant Mercer, and we're setting you up for the trading day ahead, bringing a little clarity through the chaos before that opening bell. The big overnight story sits right in the heart of large-cap software and AI. According to reporting from MarketWatch, both Oracle and Adobe delivered what, on paper, were solid quarters. And yet the market's reaction has been anything but enthusiastic. Let's start with Oracle. The company beat earnings per share estimates and, importantly, talked up a growing AI deal pipeline. Under normal conditions, that's the kind of narrative that powers a relief rally. Instead, the stock is trading lower as investors focus on how Oracle is financing its AI expansion. Concerns around capital intensity, debt, and the long payback on massive AI infrastructure are front and center. Traders will be asking, is this AI push accretive fast enough? Or are we looking at a long, bumpy road of heavy spending before profits catch up? Adobe tells a similar but slightly different story. As MarketWatch highlights, Adobe posted record fiscal 2025 results, emphasizing strong global adoption of its AI tools across the creative and productivity suites. Fundamentally, that's what you want to see in a high-quality software franchise. Yet, the stock response has been muted, even negative. That suggests we're in a phase where strong is no longer enough. Investors want spectacular guidance, accelerating growth, and clear AI monetization metrics. The bar for AI winners is moving higher, and that's a key tone setter for today's tape. On the opportunity side, one name lighting up screens is Carvana. Reporting from MarketWatch notes the online used car retailer has strung together a 12-day winning streak, with the stock up nearly 50% over that run and pressing toward all-time highs. The chatter here is about potential S&P 500 inclusion coming into view. Index inclusion can be a powerful narrative. Passive inflows, increased visibility, and a sense that a turnaround story has truly moved into the mainstream. For traders, this sits in that momentum basket, names that have already moved hard but can stay in play as long as the story and volume hold. Another area of quiet strength is in subscription and recurring revenue models. Chewy is a good example this morning. MarketWatch highlights that its Chewy program and AutoShip sales continue to grow as a percentage of total revenue, extending the streak of so-called pegged customers. That's the kind of sticky, predictable revenue that investors often prize, especially if broader growth looks uncertain. It's not the loudest story on the board, but it's a name professionals may keep on the watch list as they scan for durable subscription-driven business models. Now, to the risk side and some themes to handle with care. Those Oracle and Adobe reactions aren't just single-stock quirks. They put a spotlight on the entire AI software complex. The message from the market seems to be, beating earnings is table stakes. Questions about valuation, spending, and the real incremental profits from AI are now front and center. Traders will be watching how other enterprise and creative software names trade in sympathy. Do we see a broader fade in richly valued AI beneficiaries? Or does dip buying show up once the dust settles? Beyond tech, there are a couple of macro-adjacent stories that could creep into sentiment. According to MarketWatch, the U.S. has seized an oil tanker off the coast of Venezuela, a move that could ramp up tensions with the Maduro government. Anytime you're talking about tankers and geopolitics in an oil-producing region, energy traders perk up. Even if there's no immediate shock to crude supply, this kind of headline can inject a bit of risk premium into oil and related equities, especially if rhetoric escalates. There's also a structural housing and consumer angle to keep in mind. MarketWatch is featuring commentary arguing that ultra-long mortgages like a 50-year loan won't fix housing affordability and could even undermine retirement security. While that isn't a ticking time bomb for today's session, it plays into a longer-term narrative. Strained affordability, stretched household balance sheets, and the policy debate around housing. Financials, homebuilders, and consumer-facing names are often sensitive to shifts in that conversation. On the healthcare front, another MarketWatch piece flags a growing U.S. dependence on foreign sources, particularly China and India, for medications. The argument is that this reliance is a vulnerability in the drug supply chain. That's more of a slow-burn, policy-driven story, but it's the kind that can resurface quickly if we see disruptions, regulatory action, or national security framing. Pharma and generic manufacturers could find themselves in the spotlight if this debate heats up. In terms of under-the-radar setups, Chewy subscription push is one to keep in the background, as we mentioned. The oil tanker seizure off Venezuela is another. If it evolves into a broader diplomatic or sanctions story, energy and shipping names could see more pronounced reaction. And that longer-term mortgage discussion is something macro-oriented investors may clip and file. It speaks to the health of the consumer over the next cycle, not just this quarter. The bottom line heading into the open: the tone is being set less by a single macro number and more by how the market is repricing expectations around AI leaders and a few key thematic stories. Watch how software AI momentum names like Carvana and energy-related plays trade relative to the broader indices. That relative performance often tells you where money is quietly rotating. We'll be back once the market is open with intraday updates to see how these themes actually translate into price action. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.